go over to Iran. Gasoline prices soaring to $3.20 a gallon on Wednesday as this war escalates in the Middle East. You take a look at the stock market, a little topsy-turvy. Oil prices bonds are a little jumpy. The overall economic impact of this war is going to depend on the duration and intensity of the fighting. I want to bring on Dan Varroney, highly regarded economic strategist, two-time author, and the #1 Amazon best-selling author of Rethinking Economic Growth. Dan, thanks for being on the show. Inflation has been trending down. Is this war going to change that?
Thank you for having me on your program. Pleasure to be with you again. So a couple of things. What I want to do is to set up pre-Iran. We had solid momentum. We had inflation down at 2.4%. We had jobs growth at 130,000, 170,000 private sector jobs added. The ISM numbers came out. We're adding manufacturing jobs. We learned that on Monday. On Wednesday, we're adding service jobs. Middle-class wages are up. The middle-class average salary is up. The average refund from the IRS is in the mid to upper 3,000s, and things were absolutely going in the right direction. The minute the war happened, we started to see a rise in gasoline prices. Currently, nationally, they're around $3.25. You're absolutely correct on the duration. If this ends in 2 or 3 weeks, those gasoline prices will fall back down below 3%. Now, with regard to inflation, oil prices in and of themselves don't cause inflation. What they will do is cause prices to rise, but price increases are not inflation. What I can tell you is that prices will rise in 2 or 3 weeks because we use gasoline not only to transport ourselves, but we use diesel gasoline to transport refrigerated food products, non-refrigerated food products, and other goods from one part of the country to the other.
Dan, what about the stock market? Seems to be a little unconcerned right now. Will that remain the same?
So I think the reason why, well, let me preface it by saying that I did an interview on Sunday, and the interviewer said, what did I expect this week? And I just said, markets hate uncertainty because they hate uncertainty, and that there would be volatility. I think the stock market expected this because there's been talk of this situation for a number of months. The second thing is that, well, we will not hear this generally speaking in the media, that we are producing, listen closely, producing between 13.2 million and 13.4 million barrels per day of oil here onshore in the United States. That makes our oil supply more secure, and that while we're seeing increases in price, they would have been far more substantial had we not been pumping oil here in the United States.
All right, so as of right now, as far as the economy goes, the longer this thing goes on, the worse it could possibly get. The shorter it is, shouldn't have any long-term effects. Is that correct?
That is correct.
Okay. Dan, appreciate the time today. Thank you.
You're welcome.
All right, Dan Varroney, economic strategist.